Hi, it's Dwyer, gamblersadvisory.com, a free site, wealthspinning.blogspot.com, a free site. Let's talk money. It is Sunday, January 8th, 2022. But first, remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Let me also just say here, and it needs to be said, in my opinion, and please, you have your own, but in my opinion, following the herd blindly is almost always a mistake, right? Understand, the herd has a lot of people in it who are just blindly following whatever the prevailing public narrative is. And there is a lot of misinformation. Right? Recently, within the last year, we were hearing the myth of transitory inflation. How's that working out for you? Right? Just because a person has a position or has a fancy degree doesn't mean, and I say that while I'm wearing a Stanford shirt, doesn't mean that they have any special knowledge. Doesn't even mean that they believe in what they're telling you. Understand, some people have positions, right? Fed chairman, for example, and they might be subject to pressure from politicians who might tell them to pursue certain courses of action. I'm not saying that's what's happening at this moment, but my point to you is you can have people who know better following a party line that might not align with what they personally believe, and that might be detrimental to your well-being. Let me also say, too, that blindly following pundits, people online like myself, is a mistake. Rather, I hope you view this video as just a starting point. In other words, it's really your education, it's really your research that should determine how you invest, right? I'm just going to throw out ideas. I want you to question everything I say, right? I'm just telling you what I believe. What I want you to do is to then see if you believe it by doing research. In sum, you should really only invest in what you yourself know, what you yourself have researched. Right? So, understand, I have a very high risk tolerance. I'm a speculator. So, understand where I am right now. I'm involved in 3 different bankruptcies in the crypto world. Right? I had funds deposited at Celsius. They're in bankruptcy. I had funds deposited at BlockFi. They're in bankruptcy. I had funds deposited at Voyager. They're in bankruptcy. Right? So just understand, I'm one of those people who has money on some centralized exchanges. Right now, I have funds on Coinbase. I have funds on a trust wallet in the Binance ecosystem. Right? Just understand, I still believe extremely strongly in crypto, and I have a paid service, a subscriber service, dwyer70905.substack.com, right now that has some subscribers who know that I'm very aggressive when it comes to crypto investing, right? You need to think about your risk tolerance, not my risk tolerance. You need to ask yourself whether any individual investment is right for you. Now, with that, let's go forward. What I want people to do is to look up the inflation rate right now in the United Kingdom. Look up the inflation rate right now in Germany. Folks, those are 2 of the world's biggest economies. Right? These aren't outlier economies, right? These economies are two of the world's biggest. They're very influential. When they sneeze, the rest of the continent catches a cold. Folks, right now they're sneezing. Understand, both the United Kingdom and Germany have inflation rates right now above 9%. Let me also say, too, that there is a portion of the public, I'm not part of this portion. There's a portion of the public that look at elected officials who have great resumes, who look photogenic, who give great speeches, who can read off a teleprompter with the best of them, as having some kind of special knowledge. Right, folks? I'm just telling you, the real sovereign are markets, not politicians. I look at the Prime Minister, and I'm rooting for him, of the United Kingdom, right? Person of color. I'm rooting for him. He's making a lot of promises. Understand the reality. The British pension system was in dire crisis just a few months ago. The people in the UK don't seem to realize that they have to make decisions. They have to make trade-offs. They can't guarantee people their pension benefits without that having a cost to the rest of the economy. You have to think of the mass psychology in a certain country. Are they ready to make the sacrifices needed as we head into a deep recession? I don't think they are. I don't think Germany is. So one of the themes here is the idea of sound money. In other words, you have an energy crisis, right? Energy is something you can't just mass produce on a dime. There's only so much fossil fuels to go around, right? We can wish and we can hope for solar and wind energy to save the day. You understand that they're not doing so right now. They're not ready right now. We're in the real world. When we talk about markets, we're talking about supply and demand. There's a demand out there for energy that, quite frankly, solar and wind energy can't satisfy. Your base case needs to start with fossil fuels. Period. Right? So just understand, you have limited supply energy. You have currencies that are already in inflationary environments, fiat currencies. So I believe, as an investor, one of your trends for 2023 needs to be sound money. Right? Limited supply money. Money that politicians can't just start printing. Money that's beyond the money printing being done in various countries. Right? Understand, people want to protect the value of their money. When you hear inflation of 10%, that means that if you had $100 in fiat currency at the start of the year, if you do nothing, if you put the money in a bank, you're losing 10% of that money. Right? Just understand that. If you're owed money in a denominated fiat currency that's subject to 10% inflation, understand you're losing 10% of what you're owed in an inflationary environment. If you're one of these people who goes out and buys U.S. treasuries and you're getting a 4% or less rate of return, just understand, in a 10% inflationary environment, you're losing off the top at least 6% of the value of your money. So let's talk about what I mean by sound money. I believe you want to have a portion of your portfolio in sound money. I'm talking about gold. I'm talking about silver. Yes, I'm talking about Bitcoin. Let's be clear here, and I'm not going to talk out of deference to my paid subscribers about crypto too much here. But I need for you to understand that Bitcoin is the digital asset that is most likely to be found to be a commodity. Right? Almost everything else, there are a few exceptions, but almost everything else is going to be deemed a security by the SEC. Right? Rest assured that if your digital asset is proof of stake as opposed to proof of work, chances are that it will be found to be a security by the SEC. What that means is that your cryptocurrency is going to have to pay a stiff fine in order to continue its existence. Many of these proof of stake cryptocurrencies won't be able to pay the financial penalty. Bitcoin, by contrast, is decentralized. It's proof of work. I consider it to be sound money. Right? Part of your portfolio needs to be in sound money. Let me point out, too, that if you follow the price history of Bitcoin, you're going to find out what hodlers already know. We've been here before. Bitcoin has dropped more than 70% before, and it has bounced back because of its scarcity. Understand, too, many commentators, Jim Rogers, for example, a guy I look up to, one of the most successful investors in history, right? A guy who, by his own admission, has made a lot of mistakes, has been wrong a lot. Understand, being a good investor is a lot like being a good hitter in baseball, right? You might be a 300 hitter. That means you failed 70% of the time. Still, you'd be one of the better hitters in the sport, right? Jim Rogers, of course, believes that countries are going to outlaw Bitcoin, that the merits of the technology aren't going to matter when countries decide that they want you using their fiat currency, whether it's in paper form or digital form, right? Some central bank digital currency, right? So Jim Rogers believes Bitcoin carries risks that gold doesn't carry. Okay, fine. If you have those concerns, invest in gold, which has been with us for centuries. The point is, you need some sound money in your portfolio. Don't rely on the US dollar. Don't rely on the British pound. You're better off, in my opinion, with gold or silver or Bitcoin. Let's get uncomfortable here. I'll get experimental a little bit. We'll venture onto the battlefield of a highly contentious situation developing right now. Even with the problems with Gemini, with the accusations being hurled at the Grayscale Bitcoin Trust, GBTC. I like GBTC. I like the risk reward. Understand, while GBTC, for really libertarian reasons, right, philosophical reasons, won't be completely transparent in talking about their actual Bitcoin holdings. We've already heard from Coinbase that Coinbase is actually holding the Bitcoin, and we've heard the amount of Bitcoin Coinbase is holding on the Grayscale Bitcoin Trust, the half. Right, folks? They have the Bitcoin. Right? So, I understand Gemini might be on the verge of filing for bankruptcy. That's the Winklevoss twins crypto outfit. That, of course, had been using the Genesis digital currency group's outfit to guarantee their earn holders a rate of return. Right? Gemini is having liquidity problems. They blame the business relationship that they had with digital currency groups who owns the Grayscale Bitcoin Trust, Genesis unit. Right? I encourage you to Google all of these terms. You should know the full story. Right? Well, just understand, the Grayscale Bitcoin Trust has tried to set up a firewall, a legal firewall, to immunize itself from the problems involved in the Genesis Gemini business relationship. What you need to know is that right now, the net asset value of the Grayscale Bitcoin Trust is more than 40% below the value of its Bitcoin holdings. Folks, in other words, you're buying Bitcoin holdings at a greater than 40% discount right now if you do so through the Grayscale Bitcoin Trust. Now, ideally, I would love for the SEC to allow Bitcoin ETFs. But understand, the savings you're getting are so compelling right now with the Grayscale Bitcoin Trust that I don't care at this point because of the huge savings I'm getting. I don't care if the SEC ever allows Grayscale to become a Bitcoin ETF. Right? So just understand, if you believe in Bitcoin, if you want to participate in that market without the custody problems that would come from self-custody, yes, I'm one of those who is willing to take the risk of not having full self-custody, right? And yes, it's cost me, as I'm involved in 3 different bankruptcies involving Bitcoin custody services, right? But understand, I'm willing to take that risk. Grayscale has their Bitcoin with Coinbase, which is heavily regulated. If regulation is your concern, and you're getting such a price point that at this point, even though Grayscale itself hopes to become a Bitcoin ETF, to me, the risk reward is compelling. So understand, should Gemini file for bankruptcy, there are going to be a lot of accusations made. There already are a lot of accusations made by Gemini people against Barry Silbert, the head of the digital currency group. That, of course, owns the Grayscale Bitcoin Trust. Right? I'll live with that discomfort, given the greater than 40% discount I'm getting on the price of GBTC's Bitcoin holdings. Right? The management fee that Grayscale gets from operating the Grayscale Bitcoin Trust pales in comparison to the discount you're getting on the value of the Bitcoin holdings. Now let's go further. Let's talk about another theme. Perhaps you've heard of this one. If you go to chatgptonline.net, again, that's chatgptonline.net, you're going to see a link to ChatGPT. right? An artificial intelligence setup run by a company, private company called OpenAI. Right now, just understand, this natural search engine allows you to type in normal everyday English, questions that the system then spits out answers to you in regular English. It really feels like you are having a conversation with someone. Right? Welcome to artificial intelligence. Now, many of you are already using ChatGPT. Right now, it looks like a game changer. The market will eventually catch up. But understand that ChatGPT may have a powerful network effect if it can keep its early adopters. Its current market value is estimated to be $30 billion. Right? Here's what you need to know as an investor. A company you know, one of the biggest companies in the world already, Microsoft, in 2019, right? 3 years ago, before people became titillated by ChatGPT, invested $1 billion in OpenAI. So if you can't get in on investing in a private company, you can invest in Microsoft. Folks, Microsoft has exposure to the huge upside of ChatGPT. Right? Kick the tires. Give it a test run. Run several searches on ChatGPT. If it impresses you and you see huge upside, and you also realize that by having a piece of its creator, OpenAI, that Microsoft, which has a huge cloud business and which has a huge browser business, has positioned itself strategically to protect both of those areas by investing in OpenAI, then you might want to give Microsoft a hard look here. In fact, let's go further. You might have started using streaming services for entertainment purposes. Right? You may have moved away from cable television toward using Netflix, using Paramount Plus, using Peacock, using Disney Plus, using Hulu. Right? You understand that these streaming services all use cloud services. Right? The data is somewhere in the cloud. That cloud business is big business. It's one of the biggest money makers for some of the big companies you know. Microsoft, Amazon, Alphabet. Right? Look up the profit margin. Hold on one second. Amazon, off. As you see, I'm using AI in the background here. Well, what I want people to understand is data now is so important, especially since cryptocurrency nodes are now being stored by cloud services that understand the integrity, the security of your data is really existential to your digital business. In other words, if I'm running a masternode, a crypto masternode, that intersects with web services, then I need to make sure that the custodian of my web services, my cloud data storage, is credible. Right? I need an established player because my business depends on it. So understand, as technology evolves, maybe some new players might be able to say, hey, we offer some features in terms of our cloud business, our online data storage business, that the bigs in the field, Microsoft, Amazon, will say Google, right? Because I don't want to trigger a helper here, a digital helper in the background.
Alexa answers contributor.
Amazon,
Google is 10 to
Amazon off. Well, just understand, and I'm fighting AI in the background here, just understand that the moat for these web services companies is huge. If I'm going to store data, especially if I owe others a fiduciary responsibility and could be liable if something goes wrong, if I'm going to store digital data using a web service, then I need to use going forward, and understand data storage is increasing exponentially. I need to use an established company, right? Microsoft, Jeff Bezos's company, right? Larry Page's company. They have a moat that's going to be impossible, almost impossible, for a new player to cross. Understand, too, that they have cash reserves that are so massive that even if a promising competitor comes along, there would be competition in the mergers and acquisitions market for that company to be bought out by the bigs I'm naming. I believe when you look at a company like Microsoft and you realize that they already have a leg up on competitors in the artificial intelligence assistance department based on their investment in ChatGPT, and when you realize that they're already a huge player in cloud services, right? Their Azure segment, huge player. And when you realize that Amazon Web Services, let's wait a second here.
I don't know that.
Amazon off. When you realize that Jeff Bezos' company's web services is among the highest earning segments of that business.
I don't know that one.
And when you realize that Alphabet's web services division is among its cash cows, and when you realize that these companies have huge diversification and other promising sectors, for example, for Google, their Waymo unit, we're on the verge of having robo-taxis. They already have them in places like Arizona, right? This is separate and distinct from electric vehicles, right? We're not talking the Tesla electric vehicle highly competitive market. We're talking about autonomous vehicles. Please separate them out in your head, right? When you realize that Google is one of the dominant players in web services, and they have this potential Goliath in autonomous vehicles through their Waymo, W-A-Y-M-O division, then I believe you need to think about maintaining at least your investments in Microsoft, Jeff Bezos' company, which I can't name because the Bezos product will start talking in the background here, and Google. Let's also talk about feast or famine speculations. Now, understand, if you're a speculator, you fully understand that your investment could go to zero, right? Understand the way venture capitalists work. They invest in 10 things, right? 9 of them could go to zero. They're good as long as the 10th one does better than a 10x. Right now, I understand this company could, well, go bankrupt. But right now, the space has consolidated to the point where if you're looking for a feast or famine play, right, a play that could go bankrupt or a play that might just become a monopoly, then I continue, well, just speaking for myself, right? Again, do your own research. For me, Open Door. The symbol is OPEN. In the housing market, and understand, I have a separate play where I'm shorting the housing market. But in the housing market, I believe more people, not just folks looking for a house to live, but folks who are looking to play the real estate market, become landlords. I believe that Open Door is extremely well situated to become a monopoly for folks looking to buy and sell housing online. Right? So, as you can imagine, after a disastrous 2022, Open Door is down big. It's down big. It has a cash burn. The metrics are less than complimentary. If you're comfortable investing in something that could go up in smoke and return zero to you, but if it hits, could set you up and be a foundational investment for years, could easily go up 10x or more, then I encourage people to look at the options, call options, right? As I said, I'm a speculator. Long-term call options, not short-term call options, right? You need to think of right now as a tornado with rain, the worst kind of weather imaginable for this particular play, right? The question is, how long does it take for the sun to come out? If the company doesn't make it, and understand it's funded by some deep-pocketed entities who understand risk-reward, if the company doesn't make it, you lose it all. I want to be clear. This is the highest of risk in terms of investments I'm looking at, right? Understand, Bitcoin doesn't carry the risk of Open Door in my eyes, right? Bitcoin already is legally recognized in big economies, right? It's already legal tender in El Salvador. Bolsonaro in Brazil, on the way out the door, right, gave Bitcoin some kind of legal recognition. In Brazil, understand, in Nigeria, right, the government issued its own digital currency. The people continued to use Bitcoin. The CBDC did not gain traction. So Nigeria now is readjusting to the reality that many of its people are using Bitcoin. Right? Understand, Bitcoin carries less risk than Open Door. Right? I don't believe Bitcoin can go to zero at this point, absent some quantum computing breach of the protocol. right? I believe the odds of that are much lower than the odds of Open Door going to zero. If you're a daredevil, if you're Evel Knievel, if you devote a small part of your portfolio to high risk with the possibility of high return plays, Open Door on long-term options, right? Kick it out a couple of years for the expiration date. Looks like an intriguing play from this seat. Anyway, those are some of the ideas that I'm looking at. My crypto Substack page is dwyer70905.substack.com for crypto plays. Just understand, I am not a Bitcoin maximalist, right? Understand too, occasionally I will be in the world of options. Yes, they carry significant risk. No question about it. So that's how I see it. Let me hear from you. I hope you leave your comments in the comment section of this video. Let me also point out too that nothing I say here should be anything more than a starting point for your research. Don't rely on anything I've said here. I'm just sharing what I'm looking at and what I'm pursuing. Right? You need to do your own research. Only invest in what you know. Right? My goal isn't to make 7% a year. Right? My goal is to try to catch things at the right time. When I see Jeff Bezos' company down big, and this is as Freevee, its Prime Video free offering is taking off. This is as Amazon now has a multi-year deal with the National Football League to broadcast Thursday Night Football. Right? Some people would look at Amazon and say, well, it was down big in 2022. I view it as one of the great investment opportunities I've seen. When I look at Google, and it was down in 2022, right? The people who work at Google are nervous right now. The CEO has issued some statements. They've changed their evaluation protocol for employees. When I look at Google, I wonder whether the market has even priced in the profit potential for Waymo, which is massive. Right? Understand, I have an office in Mountain View, California. Right? For years, I've been on the road. I look over and I see a Google car with the LiDAR and stuff on it.
Sorry, I didn't understand.
And let's just say Google is further along in the development of autonomous vehicles than the market is valuing right now when it values the company. Right? Just understand, you can't look at how much a stock was down in 2022 and determining whether or not it has upside. You have to look a little deeper, and you have to also have a macro view on the value of product lines that are just being rolled out. Right? Microsoft, especially with its investment in ChatGPT. Jeff Bezos' company, which I can't name because it'll trigger a few things in the background here. Google, folks, all of them are down over the last 12 months. I like all of them. That's how I see it. Let me hear from you. I look forward to your comments. Thanks for stopping by.